Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 797A and today's date is October 21st, 2015, and the title of this episode is China Issues Offshore Yuan Bonds for the First Time to Challenge the Dollar. Now, before I get started, I have two announcements. The first one is that I created a new site called newssentinel.com. That's NEWZSENTINEL.com. If you go to the X22report.com site, you will see it on the front page. Just scroll down a little bit and you'll see News Sentinel Alternative Media, which is being streamed. And this is what this site does. It streams alternative media from all different parts of the world, from YouTube, from other places, and brings it to one location. And there are more and more streams being added to it. If you want your site added to it, and let's say you have a blog or something, there is a button there that you can say, add my site to the stream, and every time something new comes out, it will show up on this site. And it's a great place to view everything all in one place. My second announcement is the interview with Mitchell Firestein is now uploaded to the X22 Report Spotlight channel. You can go right over to that channel and view it. You can come over to the X22report.com site, scroll down a little bit, look over to your right, you'll see the video right there. Let's get right into the economic collapse financial news. Well, we see the market is down once again. The high-frequency traders, the plunge protection team, had a very, very rough day trying to keep this market up. And all we're hearing is bad news. And what we're seeing is this economy really going past a depression at this point. I mean, the amount of layoffs that we're seeing right now and that are coming up are going to be tremendous. We're seeing more layoffs right now. Biogen, they're laying off 400 people. Cabot Corporation, 300. Valorec, Star Ohio, 100. ESPN, up to 350 people are going to lose their jobs. And we're continually getting more and more bad economic news. Now, the corporate media, the U.S. government, central bankers, they're continually trying to convince us that everything is okay. Don't look at these indicators. Look at the stock market. Look at other places except what's really going on here. And we've been looking at Caterpillar quite often. And what we're seeing right now is Caterpillar, it's a complete disaster. And this is signaling right now that we are past a recession. We're actually past a depression at this point. I mean, Caterpillar had their retail sales drop starting in December of 2012. And they haven't seen a rise in retail sales even once. This is 34 consecutive months of declining global sales. I mean, 34 months. Why is this important? Well, Caterpillar is in negative territory across the board. But more importantly, the global headline retail drop, down another 11% in August, has been contracting continuously. This is not a recession. In fact, the nearly 3-year constant contraction, the longest negative stretch in company's history, is beyond what most economists would deem a depression. We are getting confirmation that we are in an industrial recession. Let's cross that out. We're in an industrial depression. Bellwether confirmed to the world that yes, we are in a depression. They have slashed their earnings and announced it would fire 10,000 people. So let's put Caterpillar's results in context. The great financial crisis resulted in 19 consecutive months of sales declines. We are currently at 34 months with no sign of picking up. This is a complete disaster. And it's not just Caterpillar. we are seeing many companies, just like we reported with IBM, revenues are down, sales are down. And when you look at the stock market, you start to scratch your head saying, how possibly can this stock market be right? Because we're getting reports that companies are losing sales and revenues are in the toilet. So we can see at this point, the whole thing is completely fake, and we're really past that depression point. And if you noticed, it's getting worse and worse as we move into the winter months, and it's not going to get any better. The middle class right now is completely destroyed. According to brand new numbers that were just released by the Social Security Administration, 51% of all workers in the United States make less than $30,000 a year. You can't support a middle-class family in America on $2,500 a month, especially when you take out taxes. More than half of all workers in this country make less than that each month. In order to have a thriving middle class, you have got to have an economy that produces lots of middle-class jobs, and that simply is not happening today in America. It's getting worse because we see more and more people who can't find work, who are taking part-time jobs, and they're making less and less money. 38% of all Americans make less than $20,000 a year. 51% make less than $30,000. 62% of all Americans made less than $40,000. 71% of all Americans made less than $50,000 last year. The federal poverty level for family of five is $28,000. And yet almost 40% of all American workers do not even bring in $20,000 a year. Think about this. If you're making $10 an hour and you're working full-time for the entire year with 2 weeks off, you'll bring in $20,000. Credit Suisse estimates that 25% of Americans are in this situation of having a negative net worth. If you have no debts and have $10 in your pocket, you have more wealth than 25% of Americans. So when we talk about housing declining, so when we talk about retail declining and contracting, when we talk about how these GDP numbers are fake, it's starting to make sense. It's starting to make sense that last year, during the most popular time of year, the holiday seasons, Black Friday, Cyber Monday were a complete disaster. The holiday season was a complete disaster. And we know that these unemployment numbers of 5.1% can't be true. Because when the unemployment number was higher, the sales were better. How could they be worse at this point? Someone's lying, and we know who it is. It's the government. Now, a lot of people have been writing in saying, do you think the crash is coming? Do you think we're past the situation because nothing happened in September? Nothing happened so far in October? Well, things are happening all around us. It doesn't matter what the market's doing. That will fall when the plunge protection team and the Fed, who is giving it free money to pump back into the market, can't create enough free money to keep this market propped up. And a lot of people are going to say, well, what do you mean? They can just keep creating and creating and creating. After a while, people are going to take notice and say, okay, this is a little ridiculous. There is no trading going on. We see right now there's no volume. And this market is staying up there. And we can see right now, just look at the market. Look how hard it is for them to keep it where it is. And this is going to accelerate. But the collapse is happening all around us. Now, here's some reasons why you should not stop prepping. U.S. exports are down 11% for this year so far. The only other time they've fallen this dramatically since the turn of the century was during the last two recessions. The amount of stuff being shipped by truck, rail, and air inside the United States has been falling every single month on year-over-year basis. This is an indication that everything is slowing down. Wholesale sales in the U.S. have fallen to the lowest level since the last recession. The inventory to sales ratio has risen to the highest level since the last recession. This means that there is a whole lot of unsold inventory that is just sitting around out there and not selling. Industrial production declined for 5 months in a row during the first half of 2015. This is something we haven't seen outside the recession. There's 102.6 million working-age Americans that don't have a job of any kind. According to Challenger and Gray, layoffs at major firms have risen to the highest level that we've witnessed since 2009. The number of job openings is declining. Last month, in August, it declined by 5.3%. This was a huge plunge in 1 month. Since the last financial crisis, the global economy has added another $50 trillion to our debt. The list of global financial giants that are having problems right now includes Deutsche Bank, UBS, Noble Group, Glencore, and others. If one of them fails, we're going to see a Lehman type of an event times 100. And again, stocks are in a bubble. They have no bearing on what is going on in the real economy. And they would have to fall 30% from the current levels just to get back to what is considered normal or average. This is how far they're pumped up. Now, banks right now, as we know, they are starting to charge a fee for those people who keep cash in the bank. And right now it's going to corporations, and very soon it's going to trickle down to the everyday person. And we know State Street Corp, the Boston Bank, is doing it. JP Morgan Chase is doing it. They have cut unwanted deposits by more than $150 billion this year by charging fees. The developments underscore a deepening conflict over cash right now. So what are we seeing? We're seeing that banks are trying to force these companies to get rid of their cash and put it into the market. And finalized last September and overseen by the Federal Reserve and other regulators, the rule involving liquidity coverage ratio forces banks to hold high-quality liquid assets such as central bank reserves and government debt to cover projected deposit losses over 30 days. Banks must hold reserves as much as 40% against certain corporate deposits and as much as 100% against some deposits from hedge funds. Yes, that's right. Banks are forced to hold either Fed reserves or USTs to guard against the dangers associated with cash. But those are worthless too. So this is just one big Ponzi scheme. That's all this is. Now, Russia has topped Saudi Arabia as China's largest crude supplier. I mean, right now, Saudi Arabia, they are struggling to cope with the plunge in crude prices that they themselves engineered, of course, well, under the instructions of the United States government central bankers, to put pressure on Russia, to keep the oil prices down here in the U.S., to make companies more profitable. They were hoping that people would take this extra money and go spend it, but it's all not working whatsoever. And we see right now that Russia overtook Saudi Arabia as the number one supplier to China. But what's more important about this is that Russia is selling their oil not using the dollar. Saudi Arabia was using the dollar. Russia is using China's Yuan/renminbi. And this started in 2015. And they're bypassing the dollar completely. Russia right now is in Iran discussing deals on energy. And where's the United States? That's right. Nowhere to be found. Russia, China, they are around the world making economic deals. United States just trying to survive at this time, just to keep the system propped up. China has issued its first offshore Yuan bond in London. The bonds are expected to raise about $787 million, offer an interest rate of about 3.1%, and they will mature in 2016. It's the first time the Chinese government has issued a bond outside of China. The move is expected to help the yuan explore the offshore currency market and facilitate cross-border trade and investment. This strategic move demonstrates the clear commitment by the Chinese authorities to grow the offshore bond market, using the City of London as a leading renminbi hub for future activities. And this challenges the dollar. And we have to remember, China has set up bilateral trade agreements all around the world and set up these hubs all over the place, except here in the United States. Because the U.S. government central bankers, they don't want to have anything to do with this. So the writing, it's on the wall right here. I mean, look at all the indicators, look at all the signs of what is happening. And when we look, we see that their illusionary numbers, they don't even make sense anymore. The corporate media is having a tough time explaining this. The government's having a tough time explaining this. And everyone who thinks that, oh, you know something, maybe we're not collapsing, maybe things aren't falling apart, well, that's furthest from the truth, because we've been looking at everything and it's accelerating right now. And this is why you need to continually prep. It's getting closer and closer. I mean, think about this. United States government central bankers, what do they have here in the United States to prove that everything is fine? They have one thing. That's the stock market. Because you know, when that comes down, everyone's going to go, oh, the economy's collapsing. That's all they have. All their effort is keeping this alive. So everyone needs to continually prep. Don't be fooled by this. People were fooled back in 2008, back in August, when they said everything was contained, everything is fine. People were fooled back in 1929, when they saw the market go back up and they said, looks like everything's okay. The worry is over. And then all of a sudden, it came crashing down. So everyone needs to be prepared. You need food, you need medicine, you need weapons, you need cash on hand, you need gold and silver. If you haven't started, you can go right to lifereliance.com. They have everything there. They have bug out bags. They have water filtration systems. They have food. You can customize your order. Whatever you're doing, don't stop. Don't stop what you're doing. And if you haven't started, here's some time that you have. I would start now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.